Wow, it was an absolute bloodbath out there in the markets today. But if you look beneath the surface of that massive sell-off, there are three stories that give us the real picture. We're talking a self-inflicted catastrophe in the AI space, a breakout star that just launched into orbit against all odds, and a quiet giant that became a lighthouse in the storm. This is your executive debrief. All right, first, let's just set the scene. The S&P 500, it tumbled 1.5%. This makes it the fourth straight week in the red. And the culprits? Well, it's a double whammy, spiking oil prices and the door basically slamming shut on any hope for near-term rate cuts. The Dow wasn't safe either, not by a long shot. It dropped a full percent as all those blue chips really started to feel the chill. It was just a classic risk-off day, right across the board. But the real epicenter of the pain? Oh, it was in tech. The Nasdaq dropped a brutal 2%. And that brings us directly to our first deep dive, where the AI hype train didn't just slow down, it went completely off the rails. So this brings us to the biggest story of the day, supermicrocomputer. And I want to be crystal clear here. This was not a case of a company just getting caught in the downdraft. No, this was an entirely self-inflicted catastrophe. I mean, just look at that. A jaw-dropping 33% plunge in a single day, and the volume was absolutely staggering. Over 237 million shares changed hands. This wasn't just some light selling. This was a full-blown investor panic. The big question is, what on earth happened? Well, here's the bombshell. Federal prosecutors are alleging that key figures at the company knowingly, intentionally, bypassed U.S. export controls to route restricted, high-powered Nvidia servers to China. Look, this isn't about a slap-on-the-wrist regulatory fine. This is a direct challenge to national security policy, and it sent absolute shockwaves through the market. So, for investors, this news triggered an immediate and just brutal chain reaction. The legal charges, that was just the first domino. That immediately sparked massive fears of a compliance nightmare. But the biggest fear of all, the real killer, the supply chain risk. Think about it. If your key partner, Nvidia, decides to pause or cut your GPU allocation, your entire business model is in jeopardy. And that, of course, led to that final step, investors hitting the eject button as fast as they possibly could. Okay, now let's do a complete 180. Let's pivot to a totally different universe. Because while the rest of the market was sinking, one company didn't just stay afloat, it strapped itself to a rocket. Let's talk about the incredible story of Planet Labs. I mean, that is just a stunning performance. In a sea of red ink, Planet Labs surged over 25%. This was a defiant roar against the market's overwhelming pessimism, a real testament to the power of pure execution. So what was the catalyst for this? Simple, pure, unadulterated performance. The company posted a massive earnings beat, bringing in $86.8 million in revenue, which absolutely crushed what Wall Street was expecting. And get this, that's a staggering 41% growth year over year. And it wasn't just the top-line revenue that impressed. They delivered a surprise break-even on earnings per share, they gave investors super upbeat forward guidance, and they announced this ambitious new space data center initiative. This was a company just firing on all cylinders, proving that even in a terrible market, phenomenal growth can still command Wall Street's attention. Okay, for our final story, we're going to turn to a completely different kind of winner. You see, in the chaos of this market storm, investors weren't just looking for growth, they were desperately searching for a safe harbor, and they found it in a very familiar name, FedEx. Now, I know what you're thinking, a 1% gain? It might not look as flashy as Planet Labs, but you have to put it in context. On a day like today, it's a monumental achievement. While all the high flyers were getting absolutely crushed, this logistics giant just quietly ground higher, showing incredible relative strength. And here is that strength in perspective. Just look at the numbers. FedEx finished the day up 1%. The broader market was down over 1.5%. That is the textbook definition of defensive resilience. So why the flight to FedEx? Well, it's the classic safe harbor thesis. With oil prices spiking, investors wanted a company that could weather an inflationary storm. And with recent upgrades from big firms like Bernstein and Bank of America, all citing rigorous cost-cutting and strong pricing power, FedEx became the perfect place to hide out from the chaos. All right, in a market that moves this fast, you've got to have the right narrative. So here is exactly how to casually weave today's market action into your conversations at the office tomorrow. So when the conversation turns to tech, You can just lean in and say, "Did you catch that 33% haircut on Supermicro today?" It's a brutal reminder that the AI boom isn't just about the chips, it's about compliance. It's a massive supply chain risk. And if someone brings up how tough it is to find any growth right now, you can pivot with this. I thought the massive 25% pop in Planet Labs was the most fascinating takeaway. They proved that a 41% top-line growth can still get Wall Street's attention. And finally, when the team starts talking about inflation or the economy, you can just add, honestly, FedEx managing to stay green is the ultimate fundamental flex, the kind of boring defensive harbor you want right now. Sometimes boring is brilliant. With SMCI facing massive compliance headwinds and the broader market reeling from oil shocks, I want to pass it over to you. Are you buying this dip on AI hardware? Or are you retreating to defensive safe harbors like FedEx until the dust settles? Comment below and make sure you subscribe to Market Fluency for your daily edge.